rich and famous. Hey. On YouTube.
Hello and welcome to the show. My name is David Lincoln. So we had a somewhat typical spike yesterday in the VIX. This is like your very typical spike that lasts basically like 24 hours. And excuse me, and it was kind of a big one actually. We had the VIX. It was up 35% at one point. If we look at the high behind me, you can see we got up to 3146 in the VIX. And this was not on the hugest down move. If we look at the E-minis, yes, we had a down move where it kind of looked like we bounced off of 3600 level. And it was kind of on not a whole lot of news why we started tanking. And I kind of tried to, although it can be very difficult to decipher why the market is moving in one direction or another, I try to figure out when we have a spike if this is something that's like something fundamentally changed about the marketplace, or if this is just kind of an emotion situation. An example of a fundamental change might be like somebody declared war on somebody, right? Some sort of binary event that like can't be taken back, but that just changes the playing field. For example, I think it was something about China in a couple years ago when there was a big spike. But yesterday, if you pulled up the news sources like Drudge Report, now I always like to look at Drudge Report, and I think there was just an article that came out that said Drudge Report is the second largest, like second most visited website or something like that. But it's conservative leaning. Everybody has their own slant. Drudge Report is conservative leaning, although I know the like hardcore MAGA people are not thrilled with Drudge because he hasn't been as hardcore to the right as some people would have liked. But regardless, if you pulled up Drudge Report yesterday, you didn't see any new headlines between the day before, when we actually volatility was basically doing nothing when we reopened on Sunday night. Between that and Monday morning around 5 a.m. when we really started selling off, there's no real new news story. Yes, there was news stories that, you know, afterwards people always try to explain why something happened. So they said, yes, there's fear of a new strain of the coronavirus in England, but that news was already out over the weekend, and Sunday night we weren't really tanking. So this is one of these things where it's like there's not a real fundamental change that you can point to for why we spike. So and A and B, more importantly, the futures came all the way back, and the market came all the way back to almost unchanged yesterday. In fact, the Dow went positive. I think maybe the Nasdaq did too. But you can see from the chart here, the market came all the way back. But even with the market coming all the way back, the VIX was still up like 3 points when we ended the day yesterday. If we look at the VIX here, you can see we started coming into yesterday. This was Sunday night. You can see it dipped down. It was around, let's see, 22 here, 21. We were flirting with 20 earlier in the week. And then this huge pop over not that much of a news story. In fact, there was what people would call good news out, right? The bill was supposedly going through, and so it was like, all right, the bill went through, so we've had optimism for so long, and now all of a sudden the market's going to move on to something else, and we had this spike. But as far as the actual movement in equity indices goes, there's not a lot going on, right? Look at this. We had this down move, but we're still kind of just in this range. We haven't broken the uptrend if you look out, you know, a few weeks. And so so this is a typical spike where we just, you know, it lasted one day basically. Let's look at the VIX. There's that one day spike, boom, and now we're back. We're not all the way back to where we were, but we've come back most of the way. Let's look quickly at VXX. Once again, reflecting that the futures are still pretty high. Now, if we go to the term structure, I think it was a very, I was really happy when I saw the term structure. Why would I say that? Well, a lot of times when you get a spike like this, where you see vol spike up, you would have us going to backwardation, A or B. You wouldn't have the back months really move up that much. You might have just the front 2 months move up and the back months kind of stay where they were. In this case, however, yesterday we saw the back months actually move up pretty much as the front month. So, for example, when I was looking at the numbers yesterday, we saw like all the back months up almost a point across the board. We were very flat around the 27 level, and which is kind of where we are now. It hasn't moved that much, but the front months moved down since then. But all the months moved up, and I always like to see all the months move up in a spike because that kind of just is resetting the VIX term structure for us to kind of ramp back lower again. So that's kind of what happened yesterday. We moved up. If you think of the back months as sort of long-term averages, we moved up that long-term average level a little higher than it was before. Before it was like 24, 25. Now it's up to around 27. And so I thought that was good. There's certainly room in the term structure now for us to gain in contango, gain in the spread, the roll yield. And let's see if I can get my screen to work here. Here we go. So here, if we look at VIX Central, we can see, yes, indeed, we're still in contango 3.5%. Now, that's not very much, right? That's pretty flat. But still, if you think of it as this is a monthly number, you can multiply this by 12, right? So it's still, if it stayed here, these products are still decaying by like 1/3 over the year, even if we stayed right here, which it probably won't. It will probably move lower. As long as we don't move higher in the VIX, this will arrange itself into more and more contango. It kind of wants to arrange itself in contango. And we've got distance between the front month future and spot, right? They're not hugging each other. So that means that even if the VIX stays up here around the 25 level, these products are still going to move lower as this future is pulled down towards spot as we come towards expiration. Now we're nowhere near expiration right now. In fact, we just basically just had expiration last week. So these futures, they're not feeling a lot of pull, especially the front month is not feeling a lot of pull towards spot right now. It will do what it wants to based on supply and demand. I don't know if you noticed, but last week you could see the August future was actually curling down, right? So we had this kind of like frowny face formation. But when I actually went and looked on barchart.com, I realized that the open interest in that August future was one contract. So it's if the open interest is one contract, then the pricing is moot. Now it's 3 contracts. So I don't want to spend a lot of time talking about the price of a future that's only traded 3 of them so far, right? So that's kind of the deal with August. When you look at these back months, the significance is not that huge if there's no open interest in them, right? So just looking at volumes, I've gone to barchart.com here. You can see the front month Jan future, open interest 173,000, and this is fairly typical. You'll see the front month is where all the trade's going on. You can see volume mostly in the front month, open interest mostly in the front month, and that will slowly switch through the month until February becomes the primary month. And that's fairly typical for any sort of futures. The front month is really what trades, and the other months they'll trade a little bit, but not nearly as much. I want to talk a little bit just about the whole COVID thing, because I've been following it quite closely, and it was a little bit confusing what happened yesterday. I was trying to figure out when are they going to vote on these things, and really what happened was they needed to publish the bill first, which was 5,000 pages, and they had problems with a corrupted file and printing the bill. So as a result of that, they weren't able to publish it it was on some website, government website, and it didn't come out until about 1:50 in the afternoon. And the House of Representatives and the Senate have different rules for pushing stuff through. And obviously, this is a big bill because it's also attached to the funding bill for the next, I think, like year. And so there's a lot of stuff in here that's been already kind of worked out over time. But it's because of the rules, it's hard to get something through. They finalized the agreement between the leadership on Saturday afternoon, and then it was all about publishing the bill and actually going through the process of voting. So we got a vote from the House of Representatives. I think it took place around about 8 o'clock last night. And then the Senate actually did vote later on in the night. But because of the rules of the Senate, you would have to have had a totally unanimous vote in the Senate for the president to have been able to sign this into law last night ahead of the deadline. So we had the government was going to lose its funding at the end of last night. They had done a 2-day extension, and it was going to end at the end of last night. They weren't able to get those 100 votes for the stimulus bill, and so what that means is that it's going to take a couple more days before the president can sign the bill. So at the last second, instead of actually getting the bill through, they had to have the president. They had to do this thing where they had the president extend the government another 5 days, and it's going to take a couple more days before the bill actually hits the president's desk and the president signs it. Now, I know that's a little inside baseball to everybody, but it's important as traders that we get the details straight on these things, because the market is going to respond to every little twist and turn of this. So it's interesting. The world of politics and the world of news is treated separately, especially by the media sources, from the world of finance. But us as traders, we need to be as informed. We need to be more informed than the normal person to effectively trade our products. So this whole, the way this stuff happens is important to break it down. It's all the nuts and bolts in trading that is actually what is going to make or break you for money. Yeah, there's broad strokes. You can say, well, I want to short volatility or I want to buy volatility, but how you do it, what you choose to do it, when you get in and out is going to be whether you ultimately determine if you're going to make money or not in these products. So the other thing with the Senate is they published the schedule for next year. They don't meet that much. I mean, they're off like the first week of every month, the last week of every month, and it's pretty amazing how little they actually work. I got the schedule of the Senate on my Twitter page. You can check that out. They publish when they're meeting next year. So they were supposed to end for the year, but they're still going because of both this vote and there's another vote that's held up the Senate that has to do with something that the president vetoed. Now, when the president vetoes something, it doesn't mean it's shot down for good. Sometimes, if the president vetoes something, it can go back and the Senate can force it through anyways. And there is one bill that is happening for right now. And so, so the Senate will come back and will continue to work through, I think, January 3rd. Let me see if I can find the info on that. But this was a bill. Okay, so this is what I was talking about before. Trump has signed the week-long stopgap to keep the government open until December 28th. Congress needs the requisite paperwork to Trump by then so he can sign the year-long funding bill into COVID relief package. So the market will respond, I believe, when Trump actually signs this, because up until when he signs it, something could still happen to derail this whole bill. However, the president has indicated that he will sign it, and so it's 99% sure that he'll sign it. But until he has signed it, it hasn't gone through. So there's this other note about the Senate that there is this bill that they're trying to override Trump's veto on, and they were going to be able to do it today. However, Rand Paul kind of objected and and is playing the situation out even longer, which is going to keep the Senate in session longer. This tweet behind me from 9 hours ago. Post-midnight update, the Senate is still in session. Senator Rand Paul of Kentucky is trying to derail plans for an expected Senate defense bill veto override vote after Christmas. So it's interesting to get a quick look into the Senate. I've always actually also been fascinated with the British Parliament and how that works compared with the U.S. The U.S. is much more boring than the British one. But anyway, so there you have it. So we will see if we have a Christmas rally moving forward. Like I said, the actual movements of the market really don't justify the VIX popping, and I think we could see the VIX bleed lower from here pretty easily if we just kind of stay around here. We did have some volatility certainly yesterday. The actual volatility of the market shot up because we had that down move. You can see to my right that down move yesterday. I mean, we close to close we didn't move very much, but during the day we had a pretty big range, a much bigger range than we've had in recent memory, and that is going to serve to pop the VIX. And indeed, we are still high, much higher than we came into the week in VXX. VXX, we were flirting with, actually we got down to 1623, I think, in VXX last week, and we were hanging out right around 17. We're up about $1.36 from there right now, and even with the VIX down a point, the futures are holding firm. Now, people ask about this a lot also. We can look, if you look to my left, you can see the VIX down a point, and UVXY and VXX aren't moving. And people might say, well, people are manipulating this. This isn't right. The VIX is down and these products aren't down. Well, what's the answer? Of course, the answer is that UVXY and VXX aren't based on the VIX. They're based on the VIX futures. And when we look at the front two futures, they've barely moved, right? The front future is down 16 cents. The second future is up 5 cents. Since this is a mix between these two futures, most of which is the front future now, but still part of it is the second future. And depending on where these futures got marked yesterday, remember, most stocks close at 4 o'clock. VIX futures and VIX stuff gets marked sometime after 4:15, and some of these data feeds get it messed up all the time. Well, they'll mark this stuff where it was at 4 instead of where it was at 4:15. So sometimes you'll have these futures, it's showing it's down in the day a little bit, whereas it really isn't down in the day because they marked it at the wrong time, at the wrong moment yesterday. And so that can be an answer sometimes. But right now, just look at these futures. One's down 12 cents, one's up 7 cents. You see that an average of these two has us really not moving, and so it makes perfect sense where VXX and UVXY are. You're not going to see there certainly is manipulation in the world, right? I'm not naive to that. There are times in the markets in very illiquid situations where you might be able to push something a little bit one way or the other. But these ideas that somehow all these people are getting together and saying, we're going to make it so Apple stays at 134 on expiration to somehow, like, screw the individual investor. That kind of stuff, it would be, even if they wanted to try to perform that, it would be very difficult to accomplish. The problem with trying to manipulate stuff is you can run into a wall, right? So, for example, if you're trying to keep the stock in a certain price, maybe you keep buying shares so that it will stay, in a certain price. Well, what if Goldman Sachs all of a sudden comes in with a sell order for 2 million shares? Then all of a sudden you're losing money, and it's not, the risk that you have to take to try to manipulate something isn't worth the potential reward. So I would be very skeptical when someone says, oh, well, they're manipulating this or that. Of course, manipulation happens in the world. But the more liquid a marketplace, the harder it would be to accomplish. And also, obviously, manipulation is illegal. We saw problems with the way stuff was being marked on expiration in the VIX last couple years. It's kind of disappeared now. They've changed a little bit the rules on how stuff is calculated. So that's not as big of an issue anymore. So when we see, if we're short volatility and we see the VIX down a point today, right now it's down 85 cents, maybe the futures haven't moved, but it's still a victory for us being short, even if UVXY and VXX haven't really moved lower. If you've got the VIX down a point on the day, it's still a victory for us being short, because that's still going to help us in the long run, the VIX moving lower. Whether it translates, now the VIX moving down a point can translate into several ways to help us. If the front month future follows that VIX down, but the second month future doesn't follow it as much, like it's actually having at this moment a little bit, then contango is going to increase. If both futures follow the VIX down, then obviously these products are going to move lower. But a day with the VIX down a point, where the VIX loses a point from close to close, is certainly a victory for short vol. Even if the futures went in the other direction and went up, you're still, that gravity and that magnet of the VIX spot moving lower is a victory, because ultimately those futures have to head towards that VIX. So I prefer to focus not on what the actual price of VXX or UVXY is at the moment, but rather on what the VIX is doing and the shape of the term structure. I had a question yesterday from somebody asking what I would do if I felt that, well, the market's going to crash tomorrow. Like, let's say my hypothesis is the market's going to crash tomorrow. What would I do to, what would be like an efficient way for me to play that? And probably one of the more efficient ways would be to pick a somewhat lower volatility stock and buy puts in that stock. So, for example, if you pull up Amazon, okay, Amazon volatility, it looks like 37, 35, something like that. Buying options in here, you could buy put options in here, for example. Or you could just stick to going in the SPX and buying put options in the SPX. SPX obviously is the volatility of the VIX. 24 range you could find for options. Now, the farther out in time you go, the less decay per day you're going to pay for an option. However, the higher the price is going to be per option. So how much leverage you can get out of a specific amount of money, it's a trade-off. If you can get more leverage by buying closer expiration options, however, you're taking on more risk. If it doesn't happen the way you envision it right away, then you might be in trouble. So the real problem with making a bet that the market's going to crash like tomorrow is that it usually doesn't, right? That's the big problem with that. However, if I can't talk you out of thinking the market's going to crash tomorrow, if that really is your hypothesis and you want to do a play on that and you're hard set on using UVXY or VXX, I would recommend buying call spreads. And the reason for that is because there is a skew in the options in UVXY and VXX. Now, a skew was introduced after the 87 crash in most indices, and what this is the reason for that was people realized that in most of these indices there were people buying put options to protect themselves from a crash, and they realized long term if you sold puts all the time, eventually you were going to get really hurt, and they kind of realized that they weren't valuing these options as being worth enough. So they started making a skew where options, the lower the strike price, the higher relative pricing they are compared with other options. So for example, if we were to pull up in the SPX, if we were to pull up an option screen and we were to look at implied volatility, right now SPX is 36.94. We would see that the options that are the lower strikes have higher volatilities than the options that have higher strikes. So if you look at my screen here, this column. If you look on the right here, you can see these columns. There's one here that says implied volatility, and you can see as the strikes move lower, the implied volatility is higher. So 2940 strike, 44 volatility. 2900 strike, 46. 2860, 48, etc., etc. All right, so that was brought about, like I said, after the crash. And with VIX products, it's the opposite. If we look at VIX products, as the strikes go higher, volatility is skewed higher. So, for example, we go to UVXY, and how steep this skew is actually changes over time. But you can see options here, for example, at the money, this is February call options, at the money, 158 volatility, we move up a couple strikes, all of a sudden 180 volatility, 190 volatility. So the way we can actually play this in our favor is by when we're buying a call spread, which is exactly what you would like to do if you're making a bet that we're going to crash tomorrow. Now you're buying an option. When you buy a call spread, let's say we bought the 13 call and sold the 20 call. So we're buying a 159 volatility, and we are selling the 20 call. We're selling a 187 volatility. So we're buying an option that is in relative terms cheaper than the one we're selling. Now, there's a little caveat to this whole volatility. These volatility numbers. These volatilities would be accurate if you were to take this, if you were to buy this February call, right? It's an at the money call, so it has somewhere around, it's about a 50-50 chance of closing in the money for an at the money call. It's assigning a delta of 59 to this, but somewhere around 50 delta. So if I was to buy these options and sell them delta neutral and sell stock delta neutral against them. So for example, if I were to buy 10 of these calls and sell 500 shares against them of UVXY, then I would be locking in 156 volatility, right? Then if I were to go and sell 10 of these calls, and these are only it's giving it a 40 delta. So if I were to sell 10 of these calls and buy 400 shares of UVXY against this call, then I would be locking in 187 volatility. And actually, there's edge in doing this trade. So, so this is the kind of trade I would recommend if you were looking to. If you're thinking the market's going to crash tomorrow and vol is going to explode, I would look to buy some sort of call spreads. Now, which strikes you picked would be determined by how aggressive you want to be. If you think that, if you're making a bet that we are going to like legitimately crash and go down 50% tomorrow, then you might pick higher strikes. You might say, well, I'm not going to waste my time with the 1320. I can get more for my money by buying the 1825 spread, so I'm going to do that one instead. You might move your strikes up the more aggressive you want to be. If you think we're just going to get a little pop tomorrow, then you might move your strikes down. You might buy something like the 1115 spread. So if we model buying this spread, so I'm buying the 13 call, then I'm going to hold down control, click on the bid for the 20 call, and then I'm going to right click. I'm in Thinkorswim now. I'm going to right click, and I'm going to go into my Analyze tab. If we were to model this trade, let's say we bought this 10 times. It shows us actually collecting money every day. So all things remain equal, you're actually collecting money tomorrow on this trade. Now this collecting money thing isn't necessarily going to be true every day as we move out in time, but for now it's true. The other point I just wanted to make is that this is a bullish trade. It's getting us long deltas. So because of the fact that we're not like locking in volatility against the underlying, the actual numbers of what vol we're buying and selling is off slightly, but that's kind of beyond the scope of what I'm talking about here. Anyway, so that's an example of a trade that you could use if you were thinking we were going to crash tomorrow. Market really isn't moving around a lot today. I would say if we stay within, E-mini is within 10 points of flat and we close like that, it's going to be very hard for the VIX to stay at these levels unless we're actually moving lower, which, when all is said and done yesterday, we didn't really move that much lower. We kind of stayed in the same area. So I would think that vol would start to come in, or would continue to kind of melt lower as long as we didn't move around too much. But those ideas are up to you, what you want to do with your position. Anyway, so that's all I have for you today. I don't usually talk. This is like an off day for me to have the show, but I just kind of wanted to cover that stuff with the Senate because I think it's important. And it really didn't seem like the news sources were really covering it very well. They kind of just said, oh, the deal's done. Everybody's congratulating each other that the deal's done, but the deal's not really done because the president hasn't signed it yet. So, hey, what's up, Edward? So that's kind of where we stand today. I appreciate everybody watching. I hope you're having a good holiday week. It's exciting coming into the holidays here. Let's hope for a better year next year as far as your money, of course, as far as just this whole crisis and all that fun stuff. RVA and Geen. So I'm sorry about the audio distortion. I'm still, probably my new audio stuff is coming today. I'm aware of the problem with the audio and I'm getting it fixed. Hey, what's up, Brent? Nice to see you. Nice to see you, Tom. Nice to see everybody. I hope you have a great day today, and I'll see you coming up next time on the Short Vol Show. Thanks for watching. We'll see you next time. Check out this guy, Manu Raju. He has great information about exactly what's happening on the Senate floor. I found his information to be fascinating. Let's see, here we go. Thank you.